industries like we've already done in microfinance, and really show the rest of the world how you can actually pursue economic development through market-based means and through the great innovation of entrepreneurs like all of you in the room here. So that's why it's important for India. And I'll finally conclude by saying that India is really at the epicenter of impact investing, which is why it's so exciting to be here right now and to be working on this. India is really at the epicenter of impact investing. We have over 25 impact-oriented funds operating in India. We just have created the Impact Investors Council, and in the Impact Investors Council, we've kind of added up everybody's portfolios to see, okay, how many companies have we invested in? How many companies have we invested in that are, going to be able to deliver social impact? And what we found is that we've collectively invested in over 100 companies. There is no other country in the world. There's no other country in the world where there have been 100 investments in these types of social enterprises. And the amount of capital that's gone into these companies is over $500 million from these impact funds, and probably over a couple of $1 billion from commercial enterprises as well. So when you look at the scale and scope of what's happening in impact investing in India, it far surpasses every other country in the world, including the US. So when you look at venture capital, obviously we take our guidance from what's happening in the US and what the US is doing, and the Googles and the Facebooks and so on. But the Googles and the Facebooks, all of these great companies in impact investing probably are going to come from India, which makes it really exciting. We've already got a few like SKS, we've got D-Light, and so on. So, stay tuned, because there's a lot of exciting stuff happening. And I'll end with that, folks. The future will be brighter.
Brighter. I think at 65 rupees a dollar, that's the only way to go up now. So tell me, at 65 rupees a dollar, how does it changes VC economics?
Thank God we don't have to answer that question. Because again, remember, we have only one objective, which is to deliver social impact, and things have gotten a lot cheaper in India, so we can deliver more social impact. But no, it's a really hard and tough blow to deal with, because as a result of this, lots and lots of investments that you made, which you thought you were earning good returns on, you're underwater. And obviously, for LPs that are looking at it purely from a commercial perspective, it's a real sort of dampener. And I think people are already thinking hard about whether to invest in India because of the political gridlock, the corruption, and so on. And this is a real downer for them. I think one of the important things to recognize as far as India is concerned is that 90% of venture capital in India, 90% of venture capital in India comes from overseas. So which means it's largely dollar denominated. So you have a lot of unhappy people in the venture capital industry right now. In fact, I was just speaking to somebody in London yesterday who was asking me this question. He says, look, we've made one investment in India, and we kind of have to decide whether we scale up what we're doing or whether we kind of shut things down. And to be honest, Jen, we're thinking of shutting things down. So that's kind of what you're seeing in London and New York right now.
Where is the hope? Where is the hope? What's the hope for this country?
Well, the hope is all of you. The hope is all of you. I mean, I think if you remember in 1991, when we had the massive balance of payments crisis, the crisis, in fact, resulted in significant liberalization. And I think some of that is starting to happen right now. And India, of course, had to devalue its currency. Things became really cheap. The IT industry, the BPO industry took off, and in fact became India's largest foreign exchange earner. And when you add, not just the export earnings, but also the remittances from our IT workforces on H-1 visas and so on in the US, basically that's what turned around the foreign exchange situation in India. So I think if we can build great companies, whether it's a D-Light or an InMobi or a Quicker or a Flipkart, these are the kinds of companies that can turn around our fortunes. And it's going to happen here with you all. So you're the future.
So as I sort of said yesterday, I think destruction is the biggest opportunity for innovation and value creation. So perhaps at this point of time in the history of India, where we have things melting down in bad sort of a way, some new creative energies are being let loose, some new innovative thoughts are being spawned in this room as we talk about, which will change the world. Thank you very much. Fantastic. So we have a fantastic next panel on impact investing. It'll take us just 2 minutes to set up the sofas back for people to sit, but I can start the panel even standing. So I invite Sandhya, Pravan, all the panelists to just sort of come on stage while the sofa is being set up. Thank you. Note set up a very nice context for this conversation. And what we have on this panel is people from different dimensions of investing in this space. So we have Pravan, who is from IFC, a capital provider. You're also leading clean tech practice for IFC. And we have Sandhya from Khosla Impact. We have from Aavishkaar, Vineet, they're deploying capital. And then we have the cutting edge of spawning new impact companies, people from Dasra and Paul from Velcro. So I think we have a constituents of all that sort of represents what is being done in the impact space. So Pravan, let me start with you. Give us a sense of, in 1 minute, what you do, what IFC's mission is, and then we'll open the conversation to Vineet and other people, and finally go to Paul to tell us what's happening at the grassroots level.
Sure. So as you mentioned, so I head the clean tech practice for IFC in South Asia. Essentially, we've been investing in clean tech for about 3 years now. It's late VC, early growth type of investments, although recently we've come down and done some earlier stage investments. So far, about 70 million invested in direct investments and a couple of funds that we've also supported. To the point on Jashyad's comments earlier, I think trying to figure out where IFC fits in all this is quite interesting, because while we do judge ourselves on impact, we also have a fairly high bar in terms of commercial returns. So those two always don't go together. So IFC invested about $18 billion in the year ended June for this year. In India, it was about 1.4 billion. So the quantum of the investments that we make is quite large. A lot of it is debt, project finance, about 80% of that is focused there. And then 20% is equity. And the early stage portion is a fraction of that. That we have.
So Vineet, I'll come to you. You've been in this space for now many years, have led and seen many changes, and you've just, I believe, raised a new fund. And how have you seen the opportunity shifting over last, let's say, 10 years? And what's the focus of your new fund?
So my name is Vineet, and I manage a fund called Aavishkaar. We have been around for 13 years, I think, around 13 years. So the first and the most innovative thing that has happened in the last 13 years is we have conferences that talk about something that qualifies as impact investing. The term was coined in 2008, so around 8 years after we were born. And that itself is actually a huge achievement. So I think that's the biggest innovation. Till 2007, we were the only guys actually doing investing. While Acumen had existed since 2001, they were actually doing not-for-profit donations and some for-profit donations. Started doing investing in India as late as 2006-07. So we had a very long series of trying to find people who actually want to do businesses where others don't want to do businesses. Try to tell them what is equity, try to give them money, try to tell them there is something called exit, which neither we understood nor they understood. And today, we actually in a stage where you have investment bankers who actually come and negotiate the valuation before the company starts. So there is a fairly large progress. You have to pay money and create value before the value is created. There is exits that are actually sought. Investors actually ask you very pointed questions. You have carry and term sheets. A lot of my employees actually think about carry. Things that we never thought about were not part of our lexicon. So in that ways, I think we have gravitated towards being a more formal investing firm than what we were when we started off. In terms of entrepreneurs, my first 5 years was largely, I was a good guy trying to invest in good guys. And by 2005, after having the dubious distinction of taking 5 years to raise $1 million, and having invested in 6 companies where very nice people were trying to do nice businesses, I realized that good people investing in good people is a very bad business. And that's the change that has taken place. So over a period of time, what you see is instead of looking to invest in good people, you're trying to invest in people who can run businesses and possibly have the heart to take tough decisions. And I think microfinance was possibly one of the more important mentions here, because between 2001 and 2005, while I also dabbled in microfinance and invested in some of the more successful companies in microfinance, the biggest benefit impact investing space has seen out of microfinance success is that it allowed a lot of talented people to look at this space far more seriously than they ever did before 2007. So all in all, what has happened? A large number of good people are trying to look at this space. A large number of Stanford and Harvard graduates actually want to relocate to India and start businesses, like they want to do it in Bangalore for actually technology piece. They want to do it for the base of the pyramid, impact investing / agriculture / whatever you call it. So things have changed in terms of talent.
Is that a fashionable thing to do nowadays, or is it deeper, some empathy happening here?
I think it's actually both the things. So there are a large number of people who are driven by the fad, the sexism. There's actually a lot of talk about this. There's a case being written by Stanford on Aavishkaar. So we are possibly the only fund ever in the history of Stanford that's a non-American fund on which they're writing a case. So yes, we are sexy right now. The realism of that sexiness is a lot of people run away from this space as well after they join in. 70% salary cut is not very exciting. So it's exciting to apply. Not many people get through. So yeah, there is a fact about it. There is a reality to it. But there is a large number of people who are making those decisions. I think the biggest debate that is going on is why can't impact investing pay markets? Market salary, market remuneration, market returns. And this debate is actually a futile debate because we don't really know, even now, despite a fairly significant and very illuminating presentation from Jayant, that what exactly constitute impact investing. And we have this council, and possibly we're going to debate, but a lot of us have very different opinions about what impact investing is. And to me, it actually varies. My opinion is following. Impact investing is very contextual to the country that you are. So if you are in US, where markets have completely broken down, so you want to do something for people with a certain color who actually are getting sucked into violence or other things. You want to create a company for them, business for them. And you know, even if this business is sustainable, will not create return, you will do it. That might be impact investing. In India, it is actually businesses like doing in Jharkhand or Madhya Pradesh or low-income states, you are focusing on rural India. That might be impact investing. If you go to Africa, just normal business is impact investing. So it's very geography-focused, it's very contextual, and therefore definitions will vary and change. And because investors are sitting all across,
we'll come to that. So let me involve Sandhya into the conversation now. Sandhya, Vinod, I met him a few times, is a hard-nosed VC, right? No nonsense. He wants to make money. What's driving Khosla Impact? Is it same or some different sense of purpose here?
I think what Vineet said is very true, which is that there are many different lenses to look at the phrase impact investing. It's not black and white. What drives Vinod, and to just give all of you a little bit of context, the Khosla Impact Fund is backed by Vinod Khosla. He also manages Khosla Ventures, which is about $2.5 billion of capital focused on early stage ventures, mostly US companies. What the Khosla Impact Fund does is take sort of the same philosophy that drives Khosla Ventures, but invest in early stage companies in frontier markets. And we don't define impact as the absence of commerce or the absence of capitalism. We define impact as having a substantial effect on the future of a community or society, right? So, Vinod...
So would you invest in a Facebook coming out of India, new Facebook?
No, not from the Impact Fund.
But why not? Facebook is impacted billions of lives.
When we define substantial impact, we look for things that change the long-term income level and productivity of communities that will see that as substantial impact. So again, this is all sort of a personal lens. Even Khosla Ventures doesn't really invest in social networks or mobile gaming, right? So what drives Vinod is a desire to change the world. which Facebook has, but in a different way than from what he looks at. And so our impact fund focuses on sectors like agri-inputs, clean tech, healthcare, information platforms, financial services, and most of the work we do is with small farmers, small merchants, anyone who's working really hard to make a living, is struggling to do so, and could be supported by innovations in technology to be more productive. That's sort of how we look at investments and thesis, and we never use the word IRR in any of our conversations. We're only focused on scale. What are ideas that can scale, and how do we support our entrepreneurs to do this? And I spend most of my time recruiting mentors and advisors and supporters for our entrepreneurs, helping them hire great talent, because like Vineet rightly said, that's a huge gap. In fact, from my point of view, that's the difference between entrepreneurs and social entrepreneurs. Social entrepreneurs have to work harder to hire good people. But other than that, they all need to figure out how to build great businesses, whether or not they have intentions to make life better for the bottom of the pyramid or not. Intentions don't scale, incentives scales, market scales, capital scales.
We'll come to that. So let's involve Manas into it. What do you do and how do you do it? What kind of entrepreneurs you're seeking? How are you planning to change this world?
Sure. So I work with Dasra. Traditionally, most of our work has been with non-profits, actually. But we do run accelerator programs. And a lot of our work across the non-profit and the for-profit social businesses is around taking people who have reached a certain stage, they've tested their ideas, they've got the pilot, they've got something going, and now they're struggling with how do they actually scale it up. And a lot of people do really get stuck in that stage, and that's when a lot of the real difficulty that you talk about and Aavishkaar sees in their entrepreneurs really come in, market access, understanding clients, building teams, etc. Over the last 7 years, we have run portfolio programs where we work very closely with nonprofits, providing 100 days of managerial assistance. And then we've run the accelerator program, which takes in 30 to 40 organizations each year, and over a 7-month period works with them on the strategy, not the strategy of how they will start, but strategy of how they'll scale, what do they need, how they're going to get there. And then we do a lot of introductions to investors. We teach them how to present more effectively and so on. Now, over the last 7 years, we've had about 170 organizations go through our program, of which about 60 have been social businesses, and the other 110 or so have been non-profits. This year, we're actually looking at doing something very different. There have been a lot of incubators that have come in. There are a lot of other mechanisms for social businesses, especially early stage ones, to find support and help, from their investors, from their mentors, from incubators and so on. So what we're doing this year is we're actually changing our program to more like a 2-year program. Building a business is like running a marathon.
Do you see yourself as an education company, a funding organization? How do you evaluate the success of the program?
So the success is really it's about did an organization scale and meet its goals over a period of time. Now, having said that, we are not investors. We don't take stakes in any of the organizations. We don't commit funding. We don't promise that we'll find them funding. We basically try to strengthen the leadership so they can go out and build an organization and raise the funding and communicate their mission and their plan more effectively. And then through our alumni support, we do help them with introductions, with revisiting the strategy and so on.
Give me an example of a company that really has benefited from what you provide to them.
Sure. We have an organization called SMV Wheels, which helps rickshaw pullers in UP to own their own rickshaws. Now it's kind of like a lending business. You lend them money, they buy the rickshaw, they pay you back. But there are a lot of nuances because of the community, the social pressures, the business pressures, the rickshaw mafia, the local politics that you need to deal with to make this happen. The founder that came back when he was in early stages said, this is how I'm going to build my program, understand capital. As somebody mentioned, they don't understand debt, equity, value creation, and profit. All these things are, they want to build a business, but all these things mean almost nothing to many of these people. So really, the first step was helping him to understand those things, and it's a very strong peer learning process. When we look at nonprofits and social businesses, they have a lot to learn from each other. Nonprofits have been around for a much longer time. They work in the same communities. And we find that, whatever we can help them with, or even mentors from the outside of the corporate world can help them. If you get 40 social entrepreneurs in a room for a week at a time and for multiple weeks over a period of time, there's a lot more they can teach each other than what any of us or even actually the investors and so on can teach them. And there's a lot of the operating stuff that comes from there. So, so SMB first built his plan. He raised some money through investors he met at the program. A year later, he was having difficulty ramping it up. He came back and joined the program again, this time focusing more on his scale-up plan, and then found more investors and more support and peer support. We've had Mother Earth has been through the program again 2 times, 1 year apart. First to identify what's the plan, get it started. A couple of years later saying, now how do I scale up? How do I take it to the next level? And actually from the learning this year, we are reorienting our program to a 2-year program. Because as I said, building a business is like running a marathon, and people need that support to come back to it. Commercial enterprises, you've got a whole, as Vineet was saying, from your first day before you have an idea or anything, you have investment bankers and advisors and people to help you, and social entrepreneurs often don't have that. So Mike Tyson, I read this quote a few weeks back, and it really resonated with us.
Okay, so we'll come back to that. I want to now have Paul into this conversation where you left.
Absolutely.
Paul, you're more into the incubation, if I've understood you right.
Right.
So I also want to not only know what you do and how you do, but also what are the trends you're seeing.
Right.
What's happening and what's becoming attractive to entrepreneurs, what trends you're seeing? You can.
So let me start with, I think what we believe in is if impact investments have to succeed, there's got to be more quality and quantity of impact entrepreneurs. And I think the big challenge that I see is the population that Jayant very clearly articulated is a growing middle, not the abject poor. Now, the number of entrepreneurs who actually have enough insights of these customers is very few. Most of these entrepreneurs seeming to be coming from middle class of India don't have enough insights. Now, how do you bring that and create that pipeline, inspire them, immerse them, and invest in them? Invest in them in a manner that you can invest in them to help them raise larger capital from other investors.
You provide funding.
So we as an incubator cover that pathway and create a pathway so that such impact entrepreneurs can actually become impact investable. And I think if we've done that, we've achieved our job. And some of the investments that some of the folks out here have made have been in some of the companies that we've incubated. Yep. Aavishkar's first investments in Servol's automation, which is a kerosene stove burner, actually was incubated by us. GSF has actually invested in a company, Biosense, which was a dorm startup, is now a professional company, and so on and so forth. So some of these, creating these impact entrepreneurs and creating that pathway is really the job of ours as an incubator, covering inspiration, immersion, and investing.
So what sectors, what kind of challenges are seeing inspirations from entrepreneurs?
I think as an incubator, I think the biggest challenge that I'm facing is to what extent can you go deep with sectoral expertise as opposed to the pipeline being few if you take each sectors. So we dabble in a lot of, we started to dabble in healthcare a little bit. Energy and agribusinesses is where we've been focusing on, but we haven't been really successful in agribusiness sector as large.
So you are thesis driven, or you wait for thesis to emerge from founders?
Largely we've been waiting for thesis to emerge, but as we move forward, I think we've taken this direction of creating some of these investment themes as we move forward. Now, that's a challenge. When you're actually working early stage, when it's very nascent, entrepreneurs are figuring out which sectors they need to be actually, or which themes are they going to be more likely to be successful in. So I think what is seeming to happen for us is we've been thesis agnostic. We seem to be drifting a little bit to certain themes, especially in sectors like energy and healthcare.
So let me raise the question, 2-3 questions that I sort of were forming in my head when Jayant was speaking. For him, the opportunity is in the middle bulge, not at the bottom of the pyramid. He, in fact, articulated it very clearly. Do you at Aavishkaar see it that way? I think if I go back to the roots of impact investing, it's been around financial inclusion. That's my sense. That's where the biggest amount of capital has gone in this space. And that was premised on people who were really at the bottom of the pyramid, wasn't it? I'll start with you.
No, I think you're right. I think we need to actually also realize that we have been evolving. Microfinance as a business is a rare business that can actually deal with very poor people. And this is actually the real discovery we have all made. While microfinance can deal with real people, rest of the businesses struggle to deal with real poor people. Part of the reason is in microfinance, what you are selling sells on its own. In rest of the businesses, you have to sell what you're selling.
Right.
And when a competition is between a want and a need, poor people choose want over need. And that's actually an experiment that has been done enough by microfinance institutions.
Poor people choose want over
need.
need.
So if you actually tell people...
And rich people have needs.
So everybody has needs, but people actually choose want over need. So basically, when a loan was being given and an experiment was done, I think SKS did that experiment, between phones and etc. to poor people, people chose mobile phone. So the question is, and that's actually because you have an aspirational world today. It's a very connected world. People are seeing what is happening. And I think Madan is here somewhere. This is actually a challenge across. You can train, so skills development is actually a huge demand right now. You can train a person, teach him how to speak English, and then send him back to the village. He has no job because nobody else other than him speaks English. And his skill sets possibly has no use in the context in which he survives. But if you bring him into Bangalore and try to get him a job in Cafe Coffee Day, 6,000 rupees is not enough for him to survive. So the problem is, aspirationally, our skills, our training, what we are doing is sometimes creating kind of dissonance, which we are also struggling with as investors. So are you dealing with, I completely agree with what Jayant has said. In fact, that's one place where most of us have a 100% agreement on, is that impact investing, unlike microfinance, cannot deal with the poor. Microfinance was able to deal with the poor, not the destitutes. They dealt with destitute plus.
Right.
And impact investing is dealing with supremely economically active poor to low income, which is actually where the diamond is, the lower half of the diamond is.
Great. So thanks. I think that sort of further clarifies the point he made. The other point that I observed, and that's relevant for clean tech a lot, which are regulatory distortions that we have, extraordinary regulatory distortions we have in this country, where kerosene is sells at a price, and solar is not sort of in a way subsidized by the government. So a lot of what you do in clean tech needs to have state subsidy. And when you build companies or fund companies or work with the companies, explain to us some of the challenges you're facing from regulatory standpoint, because my sense is clean tech needs a lot of regulatory support. Yeah, you can.
Thanks. So actually in solar you have sort of government support. The question is sort of how it works and a number of other issues that come with it. So while you get support, the types of PPAs that get structured, the credit risk dealing with a state utility that is pretty much bankrupt, the changing goalposts that sort of happens, the discounted bidding on tariffs. Gujarat recently is now trying to renege on an arrangement which I think seems to have been squashed, fortunately. But there's a lot of issues that come with dealing with the government or in a market that's highly regulated. But that support is needed because solar, at least, I mean, it's getting closer to grid parity, a lot quicker than anyone thought. In certain instances, you actually don't need government support. So if you're looking at, for example, diesel replacement, solar is, off-grid, solar actually is viable over there. So the different models, even in terms of, while you have government MNRE subsidies for lanterns and things like that, we've actually, most companies who are dealing with it are saying we actually don't need those subsidies. You actually can get a good business case even without it. And the question then becomes, how big can you build that business? Where do you end up with it, and what type of, going back to earlier point of, what is the right type of investor to invest in a business where you're not going to get supremely high commercial returns, but the impact is definitely there, like Jan talked about in terms of villages and empowering them. So I think there's a lot of unique challenges there, but for the most part, it's been fairly positive, actually. If you look back, even just 3 years ago, when you had, or 3-4 years ago, when you had the national solar mission that was announced, there's a lot of hoopla, and this was right around the time of the Cancun discussions. A lot of, criticism that this is just the Indian government's way of sort of playing up pre-Cancun, and they're not actually going to stick with it. But, again, there've been ups and downs, but a lot has really happened in the sector. More should be
You
done.
as an investor seem to be of the view that it's not the regulation that is stifling the growth of the sector. it's something else?
It's partly regulation, but that's not the only cause of it.
What are the other enablers that we need to trigger off in this economy to get a lot more investment and a lot more economic activity happening around clean tech companies?
So regulation is a big one, but then I think there's a lot of market-making activity that's needed.
Yeah.
A lot in terms of funding in particular. So in fact, a lot of the early projects that were funded in solar were by US, Exim, OPIC, who had mandates providing US-denominated debt. Now, of course, with everything that's happening recently, most of those companies who've taken that, and if they haven't done some type of hedge, and it's very hard to hedge a very long-term debt, they're going to be in trouble. I'm sure the IRRs on those projects have just completely fallen off the map. The problem that we found is that a lot of the local banks, when we had some of these discussions, it's getting better now, but we're sitting on a table saying, well, let's sort of do some pilot projects in solar, and let's look at data after about 2-3 years, and then we'll start providing funding. And you're telling them that PV at that point was around 25 years. You've got the data, but there's just a lack of understanding from some of the local banks. Again, it's changing to some aspect, but developing that local ecosystem from whether it's entrepreneurs interested in coming in, whether it's companies who want to play, whether it's funding sources. I think that's really what one of the main barriers is. So
I want to shift the conversation a little bit on the two of you, where you are in the early stage investing and helping companies to scale. Scaling companies is one of the biggest challenge in India in general, though Vani seemed to convey in her keynote that challenge is addressed. Perhaps the challenge now is how to do IRR to LPs in the way that unit economics works. That's what I understood if you were around. So let's focus a little bit on scaling challenges of impact companies. And I had a delightful conversation with one of the advisors to Nitish Kumar. And he said that some of these impact companies are scamsters. That's the word he used. He said, they are forever dependent, they never are able to build sustainable models. It's a myth that you can build sustainable models, and they sell that myth to investors, sophisticated investors, and they're very good at selling that myth. But in reality, those models can only be run with grants, right? So I just want to get your views and thoughts around that notion that I heard him say. Is it real, or there's something more than that? Any one of you can start, and then two of you can pitch in.
My only quick comment would be that, look, 90% of all startups fail. It's not that, if 90% of impact startups fail, that does not make sense.
No, he was not talking about failure. He was saying that they sustain, but they sustain on the basis of never creating really a business sustainable model.
Right, and if they were commercial, if they were commercial startup without a social angle, people would have stopped funding them.
Right.
Then,
Absolutely, that's the point.
Failure is a very key part of innovation and success.
Absolutely.
Right, so it's a little bit dangerous to label a space where, as it is, we need more investment and we need more failure to get to success. It's a little bit dangerous to say these don't work. The fact is, most startups don't work. So
I agree with that. We deal with a lot of hybrid organizations. When you deal with the ultra poor, and if you're trying to build a business on that, a lot of people have tried with genuine intent to do it and have been unsuccessful, and some have tried to take grants, look like a business, but really be more of a non-profit organization. Right. And there are really two responses to that, right? One is, if you look at the commercial world, before businesses are able to build and startups come along, you usually have somebody funding decades often of research, market building, technology building, on which businesses can be built. I mean, the US government spent trillions probably over 25 years developing the internet on which commercial enterprises were successful. A lot of those investments in infrastructure have not happened for social businesses. So you can find yourself going in somewhere, trying to build a business, and realizing you got so much stuff to build before you can actually create a commercial enterprise. Now, as investors have seen this happen, they have become more nuanced and more sophisticated. Where does a business need a grant? So if you're doing a one-time thing, right, you need to develop a product, and you know that you won't get the return on that through selling it, maybe a grant is worthwhile there, as long as your operations, once you've done that one-time activity, can actually be sustained on a commercial basis. But look, I mean, this is India, we are human beings. There are people who will try to get money from wherever it comes from, right? I mean, once you say, I want to do something, and we have seen people who say, once I've decided I want to do something and I need to do it, I've got a team going, I've made some commitments. Now, whether I need to dip into a grant pocket or an equity pocket or a debt pocket, I got to get the capital to make stuff happen. And sometimes people will overcommit or make the wrong kind of commitments. That happens everywhere. I mean, it's not like it happens in this space and not in some other space. But yeah, I mean, I think investors are getting far more sophisticated about understanding this. I think many investors who look for social impact first do understand that sometimes you need a grant to create something that is not that the market is not providing.
Interesting. So let's go 4 months in future. 1st January 2014. You wake up, all of you, and you're the same person. You look the same. You have the same age, relationships. But your career has been erased from your memory by Rajesh, right? You don't remember what you did at Aavishkaar, Khosla, IFC, Will Grow, everything. And it's the first meeting in the morning you're having with a friend, and you're thinking about creating a new career for yourself. What would you do? The future is all yours. So who's the brave one? Maybe anyone can pick up the phone. You're in the business of incubation. Tell us, what would you do if this impact thing was over on 1st January 2012? This Will Grow was over.
Oh my God.
Take this.
You know, it's scary.
Yeah, it is. Future is scary, but it's also bright.
But you know, I think my punch word in Will Grow is it's possible, right? So Will Grow, it's possible. And I think each of us have evolved over time. We've had these blocks of time every 2 years, 3 years, where we didn't know where to go, what to do. I think that will continue to be there. But I think what I see is a lot of clarity evolving on the type of enterprises, where capital can flow in. And I can see some of those decisions that we're taking today actually making a lot of sense as we move forward. Now, if you ask me, if that history was not there, the benefit of that hindsight was not there.
Yeah, you don't know what you learned at Will Grow.
What would I do? You know, that question has to be superimposed in a larger scheme and a context. And if that context is poverty in India, and if that poverty has to be eliminated, I would still go back and talk about how I can immerse more entrepreneurs into this. And I think, and that's because I believe that there are less entrepreneurs who have enough insights and understanding. So I might want to go back and say maybe I'll do the same thing. But I think possibly I should have done this
at a deeper
10 years back.
Yes, deeper subconscious level, you are driven by this need to eradicate poverty by bringing entrepreneurship.
Entrepreneurship and innovation is a means to actually do that. But poverty is a very ambitious word.
You will start thinking about building something around that area.
Absolutely.
What would you do, Praman? You will go back to US or?
So I was going to say, I think you were trying some of the career erasing techniques last night, but so I'm
getting the monkey off the back.
So I think I'm probably going to go with a somewhat boring answer, but the fact is I love what I do. I love investing. I love interacting with entrepreneurs. And I also realized, I think this was actually post-business school when I graduated, it was the telecom.com bust in the US, and was with actually 2 or 3 different startup venture funds, and none of them took off, and watched my bank account go to zero, and realized at that point that I don't have a lot of tolerance for risk. And that's why I have the greatest respect for entrepreneurs who do. And so just being part of that ecosystem, I think, is absolutely fabulous. So 2014, I think, would be the same type of approach in terms of trying to find great entrepreneurs, helping them achieve their dreams and taking pride in that. What that is, I have no idea.
Sandhya, you're the brave one, right?
Yeah, I think I would be pitching Vinod for funding for my education startup.
Excellent. Why education?
I think that's the one sector that I'm sure a lot of us are passionate about. I see it as the one driving factor that takes people out of poverty, lets them have a better quality of life. And so that's a space that right now I'm trying to invest in, but at some point I was trying to start up in it, and we'll go back to that. It's just a matter of time.
So that also sort of, I was having this talk with Niaz from Lok Capital, and sort of he was educating me for this panel. Took a mentorship session from him. And he said the financial inclusion has been the driver, but now the healthcare, education, and maybe agriculture are the next frontier. Is that how you see it? In terms of opportunities for impact investing?
Yeah, I think so. The way we came up with which space we want to have a prepared mind to invest in is to think about where it is that most people are currently getting their income from and bettering their lives, right? What are the two sources? And so anybody who has an asset, whether it's a farmer, which is a majority of families in India and Africa and China, most of them are farmers, right? So we spend a lot of time in the agri space figuring out how to get them mechanization, how to get better inputs, increase their yield, because they already have an asset which is giving them a meager income. And the second thing is education. Education allowed me to be where I am today, my father to be where he's today, even though his grandfather was a farmer, right? There's a very direct correlation to exposure and education of the opportunities that open up for you. Vineet made a great point about the fact that, okay, once you educate someone, is there enough opportunity for them to take advantage of it? And that's where you hope that the government and infrastructure and policy plays a role, that there is enough opportunity for people once they are educated. That's not what I would like to focus on January 1st, 2014. There are hopefully other great people doing it. But yeah, I agree that I don't think financial inclusion has ended. There are a lot of hopes pinned on the UID project on how that will revolutionize inclusion further.
Right.
And hopefully there'll be a new wave of startups and companies and value created on the back of UID. It's a great platform, a huge investment by the government.
So, Vineet, you want to comment on that? UID could trigger a next wave of financial inclusion investing?
See, it's a subject that has been debated so much that I would rather reserve my comments. UID first, it's already reached out claims to 39 crore people, so there is a significant amount of database. What we can do with it is actually time will tell. Of course, the reason that if UID can be used to actually have, I mean, again, there are a lot of parallel process going on, no-frills accounts, etc., direct subsidies. So if UID is actually going to be the driver for direct transfer, direct subsidies, of course, a large number of new enterprises will come up. And there are already enterprises that are hoping that that will happen, come up and funded to hundreds of millions of dollars. So I think the time is not to speculate on what will happen, is to see if any of that which was speculated will come true. And I think next 2-3 years will tell us whether it's going to happen.
So other than Aavishkaar, what's driving you?
I actually drive quite a lot, so I love driving. In fact, Aavishkaar is a job I took because I love driving, and Aavishkaar allows me to drive. So when I started off...
what do you drive? Which car? Or motorcycle or what?
So I used to, my first job was I actually got a motorcycle, Bullet. I used to be the fastest driver on National Highway 42.
Right, to Bullet man.
From Bullet, I've gone to a Jeep, then to an Endeavor, partly because I drive 50,000 kilometers every year. So I love driving. So, and I think I'm trained to be a forester, and I used to live in a forest. So depending on where you take my memory back, if you take it up to class 12, I'll join army. If you take it to graduation, then I might, or after post-graduation, then I'll go into a forest. And finally, where all of us are is basically a journey. So we have all explored our journey and found our ways. And I think the journey of 2001 is very different from journey of 2014. And I'm 100% sure I'll not be doing Aavishkaar. It will be something else.
Nice. Manas?
Yeah, could I be doing 2 things?
Yeah, you can do 10 things.
I think the first thing probably would be if I'd forgotten enough to have the courage for it, is to look at policy and to work on bringing more participation into that and more mobilization of people to look at framing and challenging the way policy and government works in India at local and national levels.
I think that's what is holding back India.
I think it's a big issue. When I was much younger, I used to think, corruption, yeah, it's a problem, but it's a small problem. But I think the more I see and the more I learn, I realize that the way corruption can cripple good ideas, good enterprises, good activities, and really hold people back in an artificial manner. I think, corruption, poor policy, vested interests, and honestly, the apathy of people who could make a difference and choose to not or are unable to, I think is a significant issue. And I think that's to drive a lot of the change over the next 30 to 50 years that our country needs. I think that needs serious addressing.
Now, what's the second thing? What's the second thing?
The second thing, actually, that's probably what I would do. That's probably what I just hope I would forget enough to actually have the guts to do it.
Yeah, you can forget anything. Yeah, sure. So on that note, please give, these are the 5 people who are at the cutting edge of driving change, and I'm sure they're very passionate, driven in what they want to do, and here to help entrepreneurs. Please give them a big hand. Thank you.